Hey all, welcome to ShareTreck. This is Raj here. Friends, this video is in response to a lot of comments that I have seen of late where people are asking me to make video about Verve Therapeutics, or they're asking me about another gene company that we haven't covered in a long time. Because we have been focusing more on CRISPR Therapeutics because that's where things are happening. And we speak a little bit about Illumina because it's again revenue generating company. So I was thinking that we should do something where I can address all these questions philosophically. So today I'm going to, in this video, talk about exactly what is holding back these genomic companies and what needs to happen for them to pick up. And I'm also going to expose to you a very lucrative part of the market which involves genomic companies as well. I have a lot of statistics to discuss. At the end of this video, you'll be able to form your own opinion on when genomic companies will turn around. And I'm also going to disclose what exactly I'm doing with my portfolio, and if it fits your risk profile, and if you've done your due diligence, you could probably follow that as well. And I look forward to your feedback in the comment section so that I can get your inputs. So with that said, let's get started. Welcome back, friends. It's allergy season. I'm having allergy right now. I have taken a Benadryl. Hopefully it would start to kick in. So let's get started. When central banks like the Federal Reserve change interest rates, it triggers a ripple effect throughout the broader economy, including both stock and bond markets. And a simplified explanation of the mechanism is that as interest rates go down, it makes borrowing cheaper, encouraging consumer and business spending and investment, which can boost asset prices. However, it can also lead to problems like inflation and liquidity trap. Inflation is just too much of money chasing too few goods and services, as a result of which money loses its value. That's why it's called inflation. Higher interest rates make borrowing more expensive, which tends to negatively impact earnings and stock prices. This is because companies face higher costs for raising capital and debt servicing, leading to reduced profit expectations and lower stock prices. Financial sector stocks generally tend to benefit from higher rates as they can charge more for lending. So let me summarize the current investor sentiment in the biotech sector. Genomics is a subset of biotech sector. So in the biotech sector, investor sentiment is significantly influenced by the current high interest rate environment. Investors are being conservative and expecting interest rates to stay high for longer, and are focusing on fundamental drivers as FDA approvals, clinical and regulatory wins, and mergers and acquisitions. And that's what tends to drive the value of biotech stocks. Here's the impact of this sentiment. If you look at the Biotech XBI index, which I'm going to show you in a minute, here we have the XBI index. It's a biotech index, SPDR Series Trust, S&P Biotech ETF. And each of the candles here is a 1 month candle. I've taken a long-term look of this index. And after peaking in early 2021, which is this area out here, it has fallen significantly, and it's currently trading around $89. And if you see, it has been in a bear market for quite a while. So there has been a double bottom. Typically, double bottoms are always considered to be something that is bullish. So if I was to pull this down here, this is a double bottom. And double bottom should give a bullish result, but we have seen that we are turned back after reaching here. So right now, if you look at the momentum, it's above average. MACD also is looking bullish, but it's tending towards the signal line. So we need to see a little more improvement out here. And this particular time period marks the steepest and longest bear market for the index since its inception. And it is driven by rising inflation and subsequent interest rate hikes aimed at controlling inflation. Now let me address what I think are the challenges for genomic stocks. Genomic stocks, particularly those who are in early and mid-stage clinical trial, exactly the kind of companies we have in our watch list, are suffering in this high interest rate environment due to several reasons. Many genomic companies do not yet have products generating revenue, making them more vulnerable to investor sentiment shifts. With few significant clinical or regulatory milestones, these stocks lack the catalyst needed to drive sustained interest and investment. So the momentum doesn't stay elevated, it keeps on dropping. Let's also recognize the short-lived nature of catalysts in the current environment. Even when a catalyst materializes for genomic stocks, the resulting bump in stock prices is often short-lived due to the prevailing high interest rate environment, and investors are cautious and tend to pull back quickly, leading to only temporary gains. And there's a lot of shorting also going on. This has been observed with many stocks. Some of the examples I can think of is CRISPR Therapeutics, Editas. They have gone up and then come down after catalyst. And there's a clear focus on acquisitions of companies with proven near commercial products rather than early stage unproven science. This can be seen in the following table that I have compiled of a bunch of mergers and acquisitions, everything that happened. I actually took the data set all the way from 1st of January 2024 till date. But the list was so huge that I decided to confine myself to May and April. And I'm going to show you the spreadsheet. Here is the spreadsheet that I compiled. And the latest one is on 2nd of May. It's pending. It's 1.75 billion Novartis acquisition of Mariana Oncology. And in the description section, it shows the reason why the acquisition took place. So I did an analysis of all this from 1st April onwards to now. If I had to add all the previous month, right from 1st of January, it will be a very long spreadsheet, believe me. What I'm going to do is I'm going to take the entire spreadsheet and I'll put it in our ShareTreck.com website. So you can go to www.sharetrack.com and check it out there. I'll also put a link in the description so that you can go and have a look at it. So this is what I have seen here, and the acquisition can be broken down into several categories based on the description field that I have here. So I would say that some of the strategic goals behind each acquisition can be broken down into patterns observed. The first pattern I have seen is therapeutic focus. Many acquisitions involve companies with therapeutic focused on specific diseases or conditions such as oncology, autoimmune diseases, pediatric rare diseases, neurology, dermatology condition, etc. The other set of merger and acquisition is for pipeline enhancement. Big pharma, when it is focused on marketing and capturing markets for its blockbuster drugs, generally tend to forget the pipeline, and then they acquire companies to boost the pipeline. Several acquisitions aim to augment the acquirer's pipeline by adding promising drug candidates or technologies. This includes acquiring companies with lead candidates in clinical trials or preclinical assets with potential for further development. And then we have another objective for M&A, which is technology acquisition. Some acquisitions in this list focus on acquiring specific technologies or platforms to enhance drug development processes or improve the safety and efficacy of existing therapies. Examples include PBSC technology for antibody drug conjugates and cell therapy assets like CAR-T and CAR-NK libraries. And then there is another objective for some of these acquisitions, which is market expansion. Acquisitions may also aim to expand market presence or enter new markets. This includes acquisitions of generic drug manufacturers to enter the US market, or acquisition of companies with portfolios covering various therapeutic areas to broaden the acquirer's offering. And then we have strategic partnership, where some acquisitions involve strategic partnership or collaboration to leverage each other's strengths. This includes reverse mergers to gain access to capital markets, spin-outs to focus on specific therapeutic areas, and partnerships to develop biologics for specific diseases. In summary, the high interest rate environment distorts share prices by making borrowing more expensive and reducing profit expectations. For the biotech sector, particularly genomic stocks, this means that despite potential catalysts, significant and sustained stock price appreciation is challenging. Investors are primarily focused on fundamental drivers and proven milestones, navigating cautiously amid broader economic pressures. And there are many people who have been sitting on losses for a long time. When they see a little bit of a jump, some of them panic and take away their money, thinking that they are reducing the losses. And yet there are many others who are dollar cost averaging down, and they are putting their entire portfolio into it and looking for more money to put into it. So that's what I think is happening in the market. So from my perspective, I feel that what is important is that we keep our focus on our objective. Our objective is to make as much money as possible and increase the value of our portfolio as fast as possible. It doesn't have to essentially come through genomics. So what I'm doing is I'm following where the money is. So most of my portfolio is right now on AI. And when I take profits from there, I would have enough money to invest in the genomics again. I have a very small portion in genomics, and I'm stuck with that because the losses in that small portion is almost 50% or more. Likewise, I have a stake in Tesla, which is 50% under. So I'm not exiting the last set of it. I have divested a lot of Tesla. So that's my strategy. Please let me know what you guys are doing. Use the comment section to give me your point of view and advice. So with that, friends, I would like to bring this video to an end, and I'll catch up with you again in the next video. Bye for now.